Hey guys, how are you? Yep, so we're going to take a little look at two tokens that are largely very divisive. We're going to have a look at Hex and we're going to have a look at XRP. Both of them cause lots of consternation amongst the masses, less so nowadays as people are realizing that all of crypto is being captured. We get less vicious a reaction to XRP, and slowly also a little bit as Pulse and rivals to the Ethereum high gas charge start to come into effect, a little bit less aggression towards Hex as well. But anyway, so first of all, for people that are part of the Hex community, don't be cultish here. I'm going to give a little bit of a lukewarm to actually mildly relative strength bearish comment. That is not a hate comment, it's not an attack, it's not a personal vendetta of any kind. In fact, ironically enough, Richard Hart, who likes to say, called the top of Bitcoin. I think in EHEX we certainly called the tops over here when it came within a couple of cents, 52 cents I think it was the high. We called a head and shoulder around here and we warned that there would be a down leg to come. And we actually said it's looking fairly bullish again. This was on our Twitter feed. I didn't do YouTubes. I don't tend to do too many YouTubes involving Hex. People get all cranky and weird in the comments. But it's because I'm in it. I have an interest in it, and I'm watching it. That I take it. By the way, I sacked for Pulse and Pulse X as well. So whilst I'm going to call a concern here, I don't want people to think that I'm being bearish or negative unnecessarily. So I was very fortunate, in actual fact, to be engaged quite early. I say quite early. I don't think it's that early nowadays. Let me just see if I can locate that image. There we go. This is when I got in significantly. I caught the very last big payday for a small amount. Over here, around about 0.003. Let me draw that for you. But that was a small sum. I was kind of, a little bit unsure over there. And I got in at 0.203 there. And then I rode the up into the run-up for the final payday and then the big smash down on the big payday. But then later, as you can see these red lines, this is a chart that I took note of. I was highlighting that this particular structure has formed, and I decided that was actually quite bullish for Hex. And I decided I was actually going to put a fair bit more in, and that structure had formed. And also against Ethereum, there was a falling wedge that was looking like it was going to break to the upside. So Hex against Ethereum and Hex here against the dollar started to look pretty good. So I decided at this point, and that was around about March, mid-March, you can see it here. There's March over there, and there's April. So I was quite lucky to get some at 0.8 of a cent because I bought in early, and then I topped up during this range. And I put in reasonable amount on Hex during that period. So let's get our charts back. I was lucky with this one. This is a technical one. That brings you basically to this point where I was buying in over here, and as I said, around about 0.008. And since then, I've been very fortunate. And I staked it as well. Most of it, small time frames, kept them rolling around. I never wanted to go full 555. I wanted to be able to get my hands on my dirty money, my filthy lucre, as they say, if I needed it. And this is how we've charted it, and it had multiple continuations. So we shared on Twitter multiple continuations of Hex for upside. This was a bit of a sketchy one, but it did happen. And then we said that looks bearish. This price behavior looks bearish. Around about the 37.5 cents neckline on the blue. So I'm going to say goodbye to this history. This is what we call an expanding overperformance trumpet, these gray lines here, and you'll see why I'm doing a bear call, or not a bear call, an underperformance relative to other things call. That doesn't mean I'm calling it to zero, calling it to crash, call it huge. I'm just saying there's a point now where you may want to book some profits. That's not advice either. I will be booking some profits out of this and I've been in it quite a while from a low down point. So let's just drop it into a slightly slower, or a lower rather than slower time frame, and we'll take you into the more recent history over here so that you can see it over there. So that's a head and shoulder. That's what we did call, so we kind of call the top, I say for now. Now you've got to bear in mind, this is going to cause a lot of divisiveness, and it's just an opinion. But Hex, that is Hex on the Ethereum chain, versus the forthcoming Hex, will have the higher gas fees associated with Ethereum. And my overall opinion is that over time, people will probably seek, those that are Hexicans and are long-term in and are buying new liquid Hex, not ones that have already quadruple 5 staked into the next 15 years. They'll leave that right there because there is no gas payment if you're doing nothing, and you don't want to forced end stake either. That would be devastating. So my overall opinion is that all new liquidity for Hex, once the PulseChain has settled in, which will hopefully be bug-free. As I said, I'm in Pulse token, I'm in PulseX. Once that's all kind of gone along and is settled in, I would expect new liquidity to start driving the Hex up, and the Hex will lose a bid. And as a result, over time, I would expect, I think it's rational, that Hex will dissipate downwards and Hex will take it up. Now, sometimes when you talk about synergy, you talk about 1 + 1 = 3. So that's a synergistic event. You put a certain amount in one side and a similar amount in the other side, and you're actually getting a little bit more. It's kind of like an economies of scale. Now you're going to have 2 hexes. Most people in a perfectly efficient market, assuming there's nothing negative, would assume the net sum of the value of Hex once Hex comes into availability and function, that however much Hex is valued at and goes up, so logically there should be a slight dissipation in Hex, so that the net sum of the two will equal where they were after before the snapshot and the release of the tokens on the Pulse chain. Now, you could argue that 1 + 1 = 3, in other words, or some number bigger than 2, on the basis that now there won't be a lot of people able to sell Hex because many of them are staked up. There might be some. And there will be new money coming in to Hex. I wonder if the overall environment, and we go into a little bit of a fear environment coming in, the rates hikes, you could actually get a scenario where 1 + 1, given the uncertainty of the new Pulse chain and the lack of desire for new cash to come in on Hex because of the higher gas fees, you could actually have a bid absence on Hex. You could lose a lot of potential liquidity. I don't know what arrangements are made. I'm speculating, and I haven't overly researched that. I don't know if Richard has a special plan. Maybe he does. Maybe we'll put some money so that the bid doesn't fall out of Hex. Who knows? But I have a slight concern that actually 1 + 1 could equal, say, 1.9 or 1.8, some number less than 2. And that actually going into the snapshot and getting the snapshot, the sum of the two halves, let's call them, could possibly also add up to less than what it was before. Well, why do I say that? Because my suspicion is, as we approach the date and time, that everybody rushes into the snapshot. Everybody wants to participate in the carnival. It's like a carnival. And one thing we can't say, that there is certainly a large amount of Hexicans where it's a complete cult. And it's the culture of just buy the man, buy the man, buy the man. That works great, and the man has served you well, and I've got nothing negative to say about the man, but there comes a point where that can push too far. And what you could have is, you could have just pre the mirror, people over pushing the value of Hex. That could even be happening now a little bit, but maybe more so as you go into the snapshot, which leads to everyone wanting to get snapshotted tokens. And as a result, after the excitement and the distribution, and everyone is participating in getting the tokens, there's not so many people participating in the bid stack of both tokens, bearing in mind you now have two markets to keep up where previously you had one. Anyway, that's a fundamental chat. What does the technical say? Let's go back to here. We said Hex needed to get some support, and it did at this point. It supported on our trumpet, the lower line, and it also supported in the last HVF's funnel. This was a very important, critical and concerning dip here after this small head and shoulders. Bear in mind this is now on a log scale. So if I put it to regular, it'll change how it views. This is log scale to show the percentage of move engaged. This was a very important period that it supported. I was hoping that Hex would actually get up to the 37.5. That was the legacy neckline of the head and shoulder here. Now I'm getting disparate views, and maybe some of you guys in the comments, because there will be some real fans in there. I heard that the OA was a large part of the sacrifice, and that there was 700 million in the original sacrifice that was new external money, and the OA was 14.3 billion, around 95%. So in terms of the Pulse PLS, and that we are now at about 1.5 billion versus 15 billion, 1.5 billion on the Hex sacrifice so far. I'm not sure if those numbers are correct. I got it from the Telegram group. Maybe you guys can confirm, with the OA still to sacrifice. So you're on 1.5 billion of, let's call it, unencumbered non-OA money, where previously there was 700 million, plus then there was the big ass OA contribution of 14.3. And this is still expected again for PLS X, Pulse X. So far, something that's been about double the size in total of new money so far, managed to push us up to 0.36. I'm not sure if this is real relative strength, because there's no doubt that the concept of the sacrifice would have been a large part of the driver in this technical move from here to there, which was in and around the 13 cents and took you all the way to the 50. So we'll see if that you will get a similar effect later on. I'm also surprised that the OA doesn't sacrifice at a time when it's in the best, most efficient. But that is, I don't know, somebody else's decision to make. It's not mine. So technically, the concern I have now for Hex is the following. You've fallen out of the rate of ascent. So what does this mean? This means you're no longer qualifying for staying in the trumpet. The rate of ascent, we stay in a symmetrical triangle HVF setup. That was the one I showed you that I entered in March 21. You stay in as long as you are getting an ascent that keeps you in an expanding trumpet, and it's a broadening structure until such time as you break it on the lower level. And that means you're no longer going up. For the amount of time you're in trade, the amount you're going up is no longer at the same rate. That shows a loss of momentum. So Hex has shown a loss of momentum. This box is meant to be there. So let's take that magnet off there, make it a bit tighter. You fell out of the trumpet here. This was a key moment. Now, in support at the time, you had a falling wedge, which leads normally to a little bit of an up move, and you broke out to the upside of that falling wedge somewhat. So you reinflated and you got into the low 20s, and now you're dissipating again. Here's the concern where the underperformance comes in though. A, you've fallen out of the trumpet. That means the rate of ascent is clearly slowing. It's understandable. It's a bigger market cap. We get that. That doesn't mean it's collapsing. It's a bear market. It's going to go to zero. But here's my concern. This is the Hex WETH chart that is wrapped Ethereum. However, it's the Hex WETH chart done in a manner to confuse you because it's upside down. That's right. Inverted structure, Hex WETH. So what had been happening is that Hex was overperforming Ethereum for an extended period, this period. Why? Because the Hex width was going down. Remember, inverted chart. What we've now got is the likelihood that Ethereum is now going to be significantly overperforming Hex, and it's breaking up. I'll show it to you the normal way around to deal with your brain that I've turned upside down right now. But that's pointing to in and around, Hex was in and around 7s. On these wicks, you could have got in at 407. So that's about, however many Satoshis that is. It's 7,000, is it? Maybe it's 70,000, I don't know. Or they don't call it Gwei, it's not Satoshi, sorry, Gweis. And this move is pointing to a halvening in essence, to around 35. You won't stop at this target, but it's around. So that means in this time frame, Ethereum, with this target that we've got using HVF method, is pointing to a stronger Ethereum to Hex relationship. And this has happened a bit before, because Ethereum's quite a tough taskmaster. It can go up pretty strongly, and if Hex is not doing particularly well at a given moment, it's had a period where it really suffered against Ethereum. Over here, for example, remember again, this is an upside down chart. This is when Hex was making its best progress against Ethereum. Over there, it actually made 16,000, and then it collapsed a little bit again. Ethereum went on a run. So this is pointing to Ethereum having a 2x in relative performance to Hex. So Hex could slip a little bit down and come off, be a bit sideways and weak. This is all going into waiting for the great snapshot event, whilst you could find Ethereum overperforming. So let's get that chart up the right way around so that you actually can reconfigure your brain. Hex width. This is the breakdown. Now, I was concerned a little bit for Hex. Here was the bounce that was quite important for it to get. When it was down here, it was in and around, well, some will say it's 28,000, went all the way up to 97,000 or 970,000. Depends how many digits you want to count on these this side. I'm not actually too sure how many. I thought it would be 8, but anyway, this is a downside break for the relationship, and it's been technically pretty accurate when we've had these. So let's just do that. Here, by the way, was my March-April expectation of X to break out against Ethereum. This was the long-standing falling wedge. All this analysis is still here. So when we were getting in here, we were seeing once at the beginning of the run, but Ethereum was running too. And then you had your third impulse. We talk about the 3 impulses. By the way, go to our website, themarketsniper.com, if you want to have a chat about joining our community. Failure to make a new low, and then the breakout. And this was all over performance Hex that I've had the benefit of riding with. And some entries from below a cent, as I say, 7 or 8 tenths. And in the very beginning where I got the last payday, it was about a third of 1 cent. So it's done great for me, and being staked up and rotating it and leaving it in and staying in the hold means it's been a year-long hodl. We're actually coming up to the year anniversary pretty soon. Now, that was another key point for Hex to break up, but now it is breaking down. This is a key breakdown event. And I was watching and waiting to see where this relationship was going to go, because it might have been an upside, until it shows its hand, but it was looking a little bit ropey over here, and now you can see the 2 next to each other. There you can see we were thinking, are you going to be an upside? It in fact needs redrawing as a downside draw on this particular version. I haven't even corrected for it yet. And we anticipate a downside target, and as I pointed out, you're looking at around 3.5, a visit back down to these levels. Now, technically, if that happens after this big move, it's pointing to a loss of momentum. So in short, were that to happen, and it doesn't have to come down that fast, I'm just running out of real estate here. So were you to get down there, overall, this huge bull structure that came all the way up, that we enjoyed riding so much, into a low there, and then a secondary bounce that gives you this down to there, is not overall bull structure. This is a bit small, this impulse, especially if it gets down to this low target. This is a bit low, and my overall opinion is I'm cooling on Hex. I'm cooling on Hex. I'm happy and very grateful for what it has delivered, and now I'm cooling on it. And I've had it for a year, and there's a lot that will happen in the supply and demand fundamentals when the market has two hex chains, hex on two chains to be maintained. And you could actually get a scenario that the majority are usually wrong. They want to participate in the snapshot and having their hex doubled. And in actual fact, maybe selling just before the snapshot and closing. And this should sound like absolute anathema to everybody listening. Not participating in the snapshot. And maybe you can just leave a little bit on so that you can be part of it all and the festivities. But locking in profits on that final surge that may or may not happen. At the moment, it doesn't look like it's going to happen against Ethereum for me. And I would like to suggest that I will be that guy that does the thing that none of you would want to do. Not participate with the bulk of his hex in the snapshot. Because everyone else wants to, and the majority are wrong, is one rule. Technically, it's going to underperform Ethereum. That means Ethereum, it's not a very big market cap. There'll be other alts that will be going up faster still that we could do cross analysis on if the market is holding up and there isn't a major deflationary event, which we've also spoken about. So Hex width is a bear. Now look, you've had a big bear here, and it still came back up some of the way, but overall this structure that it will create will point to further underside, downside potential and lackluster performance for this particular path. Remember, I don't have a view on, there's no chart for Pulse Hex. Okay, so that's an update on Hex. The other one I wanted to update on, and that I mentioned, was XRP. So let's do the great hate. It's the great hate merchants. You shouldn't hate, you shouldn't have emotions around this at all. And some of the people, it's the great love, and they'll be truly grateful and take this in the spirit that it's intended. It's not a diss, it's not a 2-0, it's not a scam video, it's nothing like that. It's actually someone who's done really well, quite grateful, and might take some money off. That's it. And most people can deal and understand that. Others can't. And don't be part of a cult. Don't be part of a cult. There's always a point where taking some money off the table is good for you. Okay, this is the XRP side of things. And as I say, I'm pretty sure Hexicans hate XRP, and XRP Ripple hates Hexicans, and there's all this trapped emotion that's going to come out in the comment section. You shouldn't, you wouldn't, and you couldn't. You should be far more dispassionate about this new world order money system that has been created for you. But anyway, this is XRP on a weekly chart against Tether, and you've got to bear in mind that XRP largely didn't participate in the last alt run because of the court case. So before I settle on and get too comfy on XRP against the dollar, let's actually show you the dominance chart of XRP, which has been largely down. And we were big bears for XRP for most of the bear markets. We said it was almost the best short you could do. You would get occasional spikes, but it was almost the best short you could do post the 2017. It just kept giving up money. On occasion you had a little bit of this, but I remember during this period it was just easy money. Bitcoin, XRP, short XRP, long the Bitcoin. You didn't have to have a view on the crypto market. You could do cross crypto changing. However, that view is now changing slightly, and we've mentioned it positively before. We had some guy in the comments going, and this guy said in November you should buy XRP and you would have made no money. We'll have a look at how it was set up in November, but our view hasn't changed. We still think XRP is going to have a period of overperformance, and in fact it just recently did, but that's not enough. That's just potentially a beginning. So they have a negative event that is baked into their price. That was the "are you a security" question that is going legal, and that negative event has been hanging over and kept them out of the last bull when Solana was going to the moon. And I can say to you now, Solana looks really heavy nowadays. It had a big correction. XRP never participated, and it actually looks like the next stage. Were we to get an alt market, be warned, be warned, be warned. I still say there's a potential risk of system breakdown with the Fed on tightenings. I don't want to go into the whole macro thing. We want to just keep it to these two tokens that I'm covering here today, and maybe a little bit of an illustration of why I say Solana looks heavy. But no matter what you say, XRP did not really participate strongly in that, assuming we don't get a huge meltdown as a result of rates tightening, gold and silver markets crashing, and then a second stage stock market crashing. Assuming none of that happens, and there's quite some high risk of that, you may actually get the benefit of some further bullish upside out of XRP. So what is the latest dominance? Well, we kind of drew a W bottom here. I've shown you this, I think, before on previous, but you won't have seen it in a while. So we will remind it again, it's a log scale chart. That W bottom has a target up top there that puts it at about 4.9 going on 5% dominance. Remember, actually, for a large part of the history of crypto modern, XRP has been the third biggest token for me. Binance then, they were then sitting at fourth for an extended period, and then they've been very much as a result of these affairs knocked down the pecking order. It's just wiped that off, and they sit at sixth behind Binance and two stable coins in terms of that, which is probably an illustration of the amount of fear in the market that the top two stable coins are actually in the top five. Is it the top five or top six? Yeah, top five, 3 and 5. So that's probably an illustration of a little bit of money sitting on the sidelines. Anyway, again, a three impulse falling wedge on the dominance. It looked like it wanted to support a little bit here, which was quite a critical level, the 1.95. And then you get a third that failed to make a new low. Second time we're discussing something like that. Do you remember it for the Hex? There's the upside break, and you're getting a little bump on dominance. Now, some people say, so what? Small bump, 1.7 to 2.1. Well, that's given it almost a 50% move over the last 7 days, which is significantly bigger than a lot of other tokens. So it has improved quite a bit. You went from the 60s to almost 90 cents. Low 60s, in fact, you traded 50 at one point. So that is number one, dominance, and we still think there's a target up for it potentially at 5. Some might say, really, almost 5%, when would you do that? Well, a small reminder, although there were probably a lot less alts out there, at one point it was 30.96. That's right, XRP was actually 31% of the market cap. Now, I don't see that happening again. A lot more tokens have come on. A lot more industries are established, like DeFi, Metaverse, etc., which are going to certainly hold a substantial amount and grow. But you could certainly have 5% seen again. So let's have a look at the dollar chart of XRP one more time and do a proper deep dive. I'm going to take the eye off. I've got a lot of analysis in there. It's almost a bit messy now. So overall, it needed to find support over here. pretty flat bottomed. And we actually need to see this come up a bit more to really square this up and not go down too far, to give us a nice 3 impulse structure, ideally with that bending up a little bit and this flattening a little bit. So let's draw that again. That's a bit messy. Ideally with a low, once it's gone up and over, nice and high on the up and not too deep on the low. That would give a nice squaring up effect to most of the compression having come across the top on XRP. So if that were to continue to be the case, as we say, all that happened with the Bitcoin sell-off, remember we thought that was going to be our low too, and then you had Bitcoin selling off again, barely making a lower low. This pattern extended. The breadth of the second impulse just got longer and got pushed out. But now you're having a disproportionate percentage surge there. Even if we put it against Bitcoin, where their dominance has gone up, Bitcoin's dominance has gone higher, as we've highlighted. If we put an XRP Bitcoin on there, you will see that XRP has still clawed back a little bit against Bitcoin as well. Again, a little bit of a falling wedge type structure with a falling wedge type break. So relative strength is expected on XRP, potentially, assuming the big deflationary crash as a result of rate tightening, a bank hack, or any major asset deflation, huge tech stock market crash doesn't occur. Finally, our favorite chart, it would be remiss of me not to do an update, is Bitcoin divided by the tech market itself. It's the one that we've continually put in front of you. It's our cross-market analysis that we tend to do, and I think it's probably the most significant technical chart for how it looked. I like every time to give you guys an update on that, because this is the bellwether at the end of the day for crypto, and this is a very, very important chart in my opinion. I think it's the most important chart that virtually nobody is looking at, but you know, I can't look after everybody else. We think that as a high beta asset class, which is how the institutional money views crypto at the current time, yes, some of them view it as the future and the whole exponential narrative and the metaverse and all of that stuff. But within that, we did call for the bottoming to occur in and around here. This again was subject to gold, silver not selling off, the deflationary event not occurring. We were a bit concerned about that. We've stayed out. We've not been too aggressive. I don't need to be in too early on this fella. But what we did say is 2.5. That means one Bitcoin buying you 2.5, exactly 2.5 of a basket of Nasdaq stocks will be a potential low for this more graduated down leg. This has been a more graduated and slightly less panicky but very consistent down leg. It just kept coming. This one came down super hard and then went into the falling wedge, where, as I say, we kept guys to get long early in this event and called it halftime oranges. We're more circumspect about this low because of the overall environment. Dollar has been stirring, not at the moment, not for the last week and a half, but generally over the last few months has been asserting more aggressively, and that was part of this lean that gave us this downside channel for this particular down leg. Maybe for a bit the dollar will rest. We'll see what happens. We have worrying setups on silver and gold that see us still think there's a bit of risk coming down the pipe for everybody. But this all said, the 2.5 held. It was perfectly in our box. We put this box a long time ago when the market was up top here and said one of our primary scenarios, not our highest one, but our second highest one, is that we bottom in that box and a localized low is put in for crypto. One of about 5 scenarios, but the 2 highest ones, and this being the second. So what we've actually seen is a bit of a rally. There's also, if we talk about our shorter term analysis, a little bit of an overhead resistance now on the crypto versus Nasdaq chart, and you've been rejected here. And I actually think this is going to see a little bit of an easing. A little bit of an easing. It's going to need some form of a wind up to get above the 3.15, which is where the last inverted downside structure first played its hand, and since then you're a break down, 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 all the way down, almost to 2.23, and you made that target of that inverted structure. And that was one of the reasons that absolutely confluences with our neckline, the blue line. So we have color coding, that's a neckline of the W bottom that's to the left here, which I'll show you over there. So we actually get confluences of levels through patterns that say, hey, this looks like a good localized low. And that allows us to scenario cast for that long before. So we had that jaw up with that box in that place whilst you were still looking at this price behavior, and we were feeling it's going to go lower. So if we go back up to the daily, there's that neckline that came from that W bottom jaw over there. Drop, 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 neckline, target made, rounded over, had a rest. So pretty good chart. The most important chart, I would say. I've done the same for Total. It doesn't change too much, by the way. So you can, instead of Bitcoin, you can also go Total, which of course has a lot of Bitcoin in it. And you can divide it by Nasdaq, or you can change it to, you know, the other tech options that are available, the composite instead of the Nasdaq 100. You're just fiddling slightly with the data. When I look at Total and this, again, it looks like crypto, outside of a major fail that comes with negative bearish news, shock and horror and all, will probably in the long run be significantly higher. This looks like a, let me get a bit more of the chart in. This looks like this could turn into a continuation pattern against tech. Remember, tech can sell off and crypto could sell off too, just less so. So this chart can go up with them both going down against the dollar. But I don't think that's going to happen too much. Generally, this chart's going to go up. Look at that beautiful setup. This was the first cup gold nugget. What the best run to be leveraged long crypto that was. And we gave it to you on this channel. Give us a like or a quick subscribe. Share it to a friend if you value that. Don't forget themarketsniper.com to book a chat to get the best out of it. This is the beginning of what we think will be a third leg, but we think it'll be, you know, chilled up leg. It's not going to be a moon up leg. Remember, it's against the Nasdaq as well, which can move if it wants to, providing we don't get the big equity sell-off. So this can work its way, you know, slowly up and over, and then you could be getting ready for that move. And Total Index, NDX, Bitcoin NDX, they will all potentially show you when this will come, and you'll get perfect continuation patterns, and then you will bull. Inside of that, you're going to go maybe moderately up, moderately down, so there'll be a selling period of some degree, and then you'll go really quiet and lazy. It's going to put a lot of people to sleep. Wouldn't shock me if this break actually happens just after summer, you know, like an August, September, after a dull period in the market just listing, because that's exactly what you need when you get a compression. The timing dovetails September we run. That could be this year, September. It's not a hard prediction. It's pure spitballing here with you. But to give you an idea. Okay, so that's Bitcoin and the tech and the Nasdaqs. Be careful, however, I think in the next week or so, overall, the metals will have shown their hand as to whether they are going up or down. We should not wish for damage on the metals. The anti-fiats, gold is the god market of the anti-fiats. Is this going to be a downer or an upper? We need to see. I don't want to take you into a metals deep dive. You can follow the Market Sniper channel for that. Pop over. But we are of a view that this could have more bearish risk than people realize. And that could be event-driven, but deflationary event-driven. Remember, wars pump oil, pump inflation, pump assets going up after initial shock and fear. So we'll have to see if this scenario comes out, because this is more about the macro market and the environment around crypto, and more of you are learning that what goes on outside there is a problem. Also, Eurozone, their debt getting out of hand, the rates going up, Italy bonds, German bonds no longer negative, Italian, Greek and Portuguese debt, or problems the minute you start talking about raising rates. Okay, that's it. So we've covered with you a quick fly past Bitcoin and Bitcoin versus the Nasdaq. We've pointed out, yes, you have a localized low for now. You did make the 42K, which was a key level of significance. You really hung there for a while. It was a case of will you, won't you? You can see that. Then you got a little bit of a low vol wind up there. That gave you a squeezy Japanesey to get you over the hurdle. And this is where you are now. Still looking for now reasonably okay, providing everything else plays the game. But be careful about getting too big, too strong. I wouldn't, if whoever you are, wouldn't get leverage long right now in the environment of that potential deflationary event that the metals seem to be indicating could occur. It could purely be a metals phenomenon. You could have a bond event that's purely a bond phenomenon, and Bitcoin just and the crypto market just refuses to react. Fine, good for you, good luck. But generally now what we're seeing is a more joined up market world. Less asset pricing in a little bubble, totally in isolation of all other effects going on. More compliance to the risk on, risk off environment and a number of other things. Okay, that was your crypto update. We touched on Bitcoin. We touched on its relative valuation against the tech world. We also touched on the Ripple and Hex for Ripple fans and Hexicans. I did say that I would show you Sol, and that my observation was Sol had been disproportionately heavy in this bear leg and then worn it quite hard. So let's just show you that on a bigger time frame. This was the performance to target on the HVF of 260, and from there, boy, did he fall. For me, this is a head and shoulder that it kind of had, by the way. So you Sol like that, big ass head. We use funneling for complex head and shoulders, so that was the jaw, and that was the target made, and it's pretty good target made. And this is a little bit sclerotic from, and could be, if that deflation event comes in the next week or so, this can again have a dip down. Don't get too into the Kool-Aid of the whole crypto reinflate game generally. And Sol for me as a bounce back from its highs has shown quite low bounce back ability. There's a new word for you. You never knew existed. Yeah, you learn all sorts of things here on the Sniper channel, including bad English. So you haven't recovered 23.6% of what you've lost since the lows. Compare that to Bitcoin from 69 down to, you actually traded, I think, at 30s, 32.9, 69, 32.9. That's a 30,000, almost halvening the second one, and now at 45. So from 32 back up to 45, that's 13,000. It's a reasonable percentage. We'll compare that. Sol, in the meantime, is at about 19% recovery of its sell-off. Careful, guys. Careful. You have a very big final spill here. It's natural for you to get a bit of a rally after that. You have, this was almost like a 5-leg thriller. And you had a really big one in percentage terms there. So if Sol's made 18% back, what has Bitcoin done? We'll check it out for you, and then we'll finish on that. And we'll do ETH as well. Why not, while we're here? So if we have a look at that, you can see that Bitcoin's bounce back ability is significantly better. It's probably in and around 23 to 38. You're halfway in between the two. So it's about 15 plus another. You're at about 30%, 31%. So you've got Bitcoin at about 31%, Sol at about 19%. So the risk on is not back. The riskier tokens, not all of them are being pushed back up higher. Ethereum, I think, is a little bit better than Sol in terms of that, and we'll see how it's done compared to Bitcoin. and I think better still in the bounce back ability stakes. We do that, but it did have quite a nasty long wick there, spill. But you're through the 38.2, you're probably 40%. So you have Sol at 19%, half what Ethereum has bounced back. I've just told you that Ethereum is going to be dominant against Hex. Ethereum has been dominant against most of the tokens. It's beating Sol as well in the bounce back ability stakes, and it's beating Bitcoin, which you could expect. It's a smaller market cap, but it's on the upside. Sol hasn't been able to do that. So with Bitcoin in and around 30%, you've got ETH at 40, and you've got Sol at sub 20. So that's just giving you a who's heavy and who's not, and that's why I said to you, Sol is heavy. Okay, we took in quite a bit there in the end after doing all of that. Thanks for checking in with me. Remember, you want to build wealth in reset times, and boy, are these the reset times. Do not become a believer and a cultist to any token. We are not, none of them that I've covered am I a cultist to. I am a chartist. If the chart is right, I do it. And when the chart ceases to be something that will serve me for my wealth building, I will leave. I can have long-term views and hold. As you've seen, we've had a year of Hex and it served us very well. Thank you and gratitude always. And when it ceases to meet the criteria, we can also take off. And that is the option of it, including before a snapshot, because the majority are usually wrong. Yes, you heard me say that. In the same case of XRP, the great loathed one that's had nothing but bad news, may be overdue the performance. And as I say, we were talking a lot about this inside premium. And now it's, to many of you, it's a case of, well, the horse has already bolted. I wouldn't charge in right now. I think this is looking like it's going to soften. But after a bit of softening, you can see these wicks here. You could, in fact, get a post pullback. You could go a little higher still. I told you where we're looking for a relative high 3, a bigger push upwards to help fix the fact that it was kind of flat bottomed and a little bit heavy. It needs to do that to be ideal. Remember, you want what you want. Hold out for what you want. If you aren't getting it, go somewhere else. Okay, on that note, I'm going to thank you all for watching. Like and share, and we'll see you. Book a call if building wealth in reset times is your bag. Thank you for watching. Bye-bye for now.